hear me. Let me know if you can hear me, and then we'll get started. Okay. All right, good morning, everybody, and welcome to the U.S. Retail News 10-Minute Trades Trade Room. My name is Lee Goldstein. I'm the Trading Director for 10-Minute Trades. And don't forget, all the trades we take are for educational purposes, and it is possible to lose money trading futures, so trade carefully, okay? How's the audio, folks? Just checking. How's the audio? Sounds good? Okay, good. I don't understand why some days it sounds like it's in a can, and other days it's fine. So it's a mystery. Don't really get it, but it happens. So this morning, we're dealing with gold. I've been watching gold for like the past half hour. It's a little bit volatile this morning. Definitely a little bit volatile. Now, I want to show you something. There's still some echo, but it's clear. It's after the trade, I'll try a different mic. I did a lot of mic testing. I made like 10 videos with 10 different mics. All right, so what I was going to say is I wanted to show you something on the DMM, because there's something that should not be done, not according to my testing. There is no ES trade on this report. It does not move. It might have moved last month, but actually, you know what? In our video, we can see that the ES wasn't that great. I would not take that trade. Okay, my testing shows nothing going on there worth a trade. So our setup on this report, we got stopped last month because there was a big move in one direction. That means last month the breakout would have worked. But we have not traded retail as a breakout for 6 months, okay? Retail became a quality trade when we started trading it as a trap trade. So I'm going to record from the very beginning this morning and go over very carefully how to set up a trap trade. So let me just set up the audio. And I'll show you what happened last month so you understand what the enemy of a trap trade is. Every trade setup has an enemy. The breakout trade, what's the breakout trade's enemy? A move in two directions, a whipsaw, right? A fill and a reversal. That's the enemy of the breakout trade. The enemy of the trap trade is a move in one direction that doesn't reverse, okay? That's the enemy of the trap trade. Because the definition of the trap trade, it's a specialized reversal trade. That's what it is. And because it's a specialized reversal, it's also generally a low slippage trade, because we're trading in the opposite direction that the market is moving, okay? So the trade's a little bit nerve-wracking, because the worry is that retail sales are going to be good. My gut feeling is I think retail sales are going to be good. Now, I never trade or make a decision based on what I think the news is going to be. And plenty of times I'm totally wrong. But let's take a look at last month, the trap trade, so you can understand how it's supposed to work. So what's going to happen is, yeah, I just want to watch something real quick. Okay, so last month was October, and there are our orders. So the way that the trap trade works is 20 seconds before the report comes out, we bracket the price just like we do in a breakout trade. But we bracket the price with 2 orders, okay, not 1. And we call those tiers. And some of the trap trade nomenclature is just based on tradition and what the trap trade used to be called, and it is what it is, okay? Of course, we could have called them orders. It probably would have been simpler. But it's not the way it was invented, so we continue to call them tiers, okay? So 20 seconds before the report comes out, we put our tiers, our orders on the chart, and we're expecting gold to go up and short the orders. You notice they're sells when you go up, or when it goes down, we're going to buy. So what happened last month is it continued in one direction. We put the orders on the chart 20 seconds before the report. And there's also some tradition in that also. So now the report comes out at 8:30, and there was a whole bunch of reports last month also, which should have helped create a move in 2 directions. It should have helped the trade work, but it filled to the downside, which means it bought the market, and then it just had very little opportunity, if at all, to reverse. It just didn't reverse, okay? So it kept going, kept going, kept going, and it's going to stop out. It just didn't really pull back. Now, when you look at the news result, the retail sales were pretty positive. You also had Empire State, which was negative, which is interesting because we saw a pretty big move from Empire State yesterday when it traded by itself. But see, when it trades with another report, it doesn't really have much of an impact. So unfortunately, the trap hit our stop by only a tick or two. Only by a tick or two. Let's see. Did it keep going down? If it keeps going down, no, see it. I'm just following price to see. So eventually it had a reversal. Okay. But we have a stop, and those are the rules. We went with the stop. The stop is 18. You know, we could have a stop at 20. Might be smarter. It might not be crazy to use a 20-tick stop. It might have saved us. Maybe. So that's a trap that didn't work. Okay. And it's pretty clear and pretty simple. It's not really complicated. So 20 seconds before the news, we put our orders on the chart. You could put them on 10 seconds, it's okay. The arrow is the current price at the time that the orders go on the chart. And then the news comes out at 8:30. It's a little teeny bit delayed, but not much. Pretty normal. A pretty normal news release, I would say. And you could see it. It fills the first order, and then it chops a little bit, and it fills the second order, and then it just never pulls back. Now, if retail has decided that it's going to be a breakout trade going forward, starting last month, we don't know that. We're going to get stopped if that happens. The only thing we have on our side is the history of the last 6 months. 5 winners in a row. The one thing that I would rather see good retail news, right? So maybe this is setting up to help us. If we have good retail news, gold, in theory, would go down. And there's a big gold trend to the upside this morning, so that might help us with a reversal because gold might want to be trending up today. Okay, so it might help if we're filled short. You say might because retail is a pretty strong report and it often just behaves the way that it wants to. Okay, it honestly just behaves the way it wants to. Let's look at September. Somewhat similar, with similar setup. September, we traded live with micro. If I remember correctly, it went pretty wild using the micro. Let me see if my memory is correct. I remember it being one of the trades we tested with the micro gold. Yeah, this was really totally choppy, totally different than regular gold. And it did work. Or it started to work. Yeah, that's not the way a normal index trades. And you can see regular gold was not doing what micro gold was doing. So I still maintain that micro gold is not trading like the other micros, okay? It does not trade like micro oil, micro NQ, micro ES. It's an older micro that I think that maybe they're not going to create a new gold micro because they think micro gold is good. Now, maybe it'll get more volume, but that's part of the issue, is volume and liquidity is weak. So let's understand how to set the trap up. So you load the strategies, but you're going to use the trap trade strategy. Use the trap trade. Hang on one second. So we're going to use, for some reason my audio is blasting in my ear. And it won't lower. Okay, there's nothing much I can do. So you click on Trap Trade version 3 if you have version 3. That's what's on the website. Some people might have version 2, works perfectly fine. There's a couple of differences. I'll tell you what they are. So when you set it up, the bracket center is a default, and it should say price at the time. The average price bars is a default. It's set to 10. Position 1 and 2 should be a 1. Okay, if you're trading 2 contracts, and there's plenty of risk trading 2 contracts. So position 1 should be a 1, position 2 should be a 1. Wait for spike is a default. That just stays the way it is. And then the stop loss position is a difference between the versions of the trap trade. The old version of the trap trade, the default said average price, but we never use average price. So it's been changed in the new version to last fill price. Anytime you want to change something in the software, you just click on the arrow and it lets you change it. Stop loss position should be last fill price. Now I fill in the stop last. That's the last thing I fill in. So tier 1, and the tradition of the trap trade is the tiers give you a range. So you can choose 16, 17, or 18. And it's just a tradition. And it just is a illumination that targets and orders don't have to be exact, especially on a trap trade. So I'm going to use 18. And then tier 2, I'm going to use 30. The bigger the move, the bigger the number, it means that there will be a little bit more of an opportunity for a reversal, because that's a big move if it goes 30 ticks above the current price. The entry time is the time of the trade. Okay, the trade is at 8:30. So that should actually say 8:30. Entry time should be 8:30, but we're actually going to enter according to how the order preparations are set. On the DMM, it says 8:29:40. So that means 8:29 and 40 seconds. That's 20 seconds before 8:30. So theoretically, right, you would put 20 seconds in order prep. The reason for this little bit of discrepancy, in the old days on the trap trade, we used to move our orders around a lot before the trade. The markets are much more volatile now, so we don't do as much moving, if at all. So just to understand, it's not really confusing, just the time above the order prep is the time of the trade. Okay, time of the trade, and I'll get that updated. I'm working with the programmer. We're going to get that updated. And then the order prep seconds, 20 seconds before 8:30, my orders are going to show up on the chart. That's all that means. 20 seconds before 8:30, my orders show up on the chart. And that's it. That's the trap trade. And then don't forget to adjust your stop. So our stop is 18. Cancel 10 seconds. That's a tough one, whether you would cancel. Sometimes we've gone as long as a minute before a trap trade gets canceled. In these current markets, I think that we'll probably get a fill, excuse me, before 10 seconds. So, tiers, you don't have to use what I use. You can use 16 through 18, 25 through 30. Okay. Entry time, so the time of the report is 8:30. And the order prep, 20 seconds before 8:30, that's when my orders are going to show up on the chart. So let me set it up. Let me check that I'm in the right account. And I am. Okay, so let me check one more time. We'll go over the setup one more time. Bracket center, price at the time, average price bars is 10, position is 1, position size, both are 1, positions 1 and 2. Wait for spike is a default, it'll be on 5, you don't do anything. Stop loss, make sure it's on last fill price, not average price, last fill price. Tiers, I'm using 18 and 30. The time of the report is 8:30. And then 20 seconds before 8:30, my orders will show up on the chart and my stop is 18. That's my setup. Apply it, okay it. When you enable your trap trade, you get a trap trade logo. So let's check our time sync. Time sync, not quite as important in a trap trade because we're putting our orders well before the report takes place. But I still like to be in sync, okay? I like to be in sync. So we go to the website time.is to put us in sync. So I want to thank everybody on YouTube for watching. If you'd like to see full trades, please join our trade room at the following location. And I want to thank you all for watching us on YouTube, and we'll see you at the next stream.